Jessica, good day. President Donald Trump's speech has come and gone, not many surprises, and we see the dollar gaining. What's been the general market reaction?
Well, after the State of the Union address last night, today we're seeing markets not perform so well, a little bit weaker today. The S&P 500 down on the day there. There's still persistent concerns over trade, as well as if we're going to see another government shutdown there. There'll be talks in Beijing next week between U.S. trade representatives and their Chinese counterparts. So that's something to really monitor going forward. And then we have the dollar really showing strength, rallying for a fifth day here after we received some delay data showing that the U.S. trade deficit actually narrowed more than expected in November. So we have the Bloomberg Dollar Spot Index up about 0.4% earlier in the day.
Now, Snapchat, not very popular, not as popular as WhatsApp here in South Africa. But when we look at the big company Snap here, their shares rising the most in almost a year. What's behind that surge?
Yes, Snap shares really rising here, almost a 30% gain today, which is quite impressive. That's after the company reported fourth quarter earnings results with revenue beating expectations. Snap also noting that it's stabilizing its user base. That's been quite interesting to analysts. We had UBS come out and say the results are a step in the right direction, lifting its price target on the stock. We also have Goldman, Morgan Stanley, RBC, among others, also boosting their price targets. The average price target's right around $8.63. That's according to Bloomberg data.
And as we always do, Jessica, we talk about oil. Brent crude oil up about 1% for us. What's the oil story in your end of the outlook?
Yes, oil is posting a rally today. Brent rose about 1%. WTI following suit, also gaining here. That's after we received a inventory report from the Energy Information Administration showing surprisingly strong gasoline demand for this time of year, as well as a drawdown in distillate inventories. Gasoline demand actually at the highest level seasonally since 2007, so quite impressive there. And even though we did get a small U.S. crude inventory build, it was smaller than expected, so analysts kind of ignored that data point and focused on the strong gasoline demand.
Jessica Summers from Bloomberg, all the way from New York. Thanks very much indeed.